Hey guys, welcome back to the Fire Grind. My name is Daniel, and on today's episode, we're going to be going over Tesla's earnings call that just happened after hours after the market closed. So Tesla, they actually pulled out an amazing quarter, better than all the analysts thought. Here's kind of the lowdown on what they did. So they beat their EPS by $1.45, and the EPS was $1.24. Their GAAP EPS though was 9 cents, and they beat the estimates or the previous forecast by $1.75. The revenue was beat by $140 million at $6 billion, basically, 5.99. And this is a 31.9% increase year over year. And that's even with the whole situation with the virus happening. And they managed to pull out a 31.9% increase year over year. So this is kind of amazing, the fact that they were still profitable in the third quarter after essentially all America shut down. Definitely the first couple months played a big factor into helping them build up a great revenue stream, and they've definitely streamlined the whole process, and there's a bunch of exciting news about what they've done in the quarter. So the first thing that was super exciting was that Model Y actually started shipping. I believe they started shipping in March or so, and the first Model Ys, they're actually shipping the higher average selling price Model Ys. So these are the Model Ys with the performance upgrades and all the extra packages. So therefore their average selling price on their vehicles were a little higher this quarter, just because they're selling the higher end Model Ys and they're just fulfilling all the back orders or the pre-orders that people put in. So their margins were actually 25.5% of their sales, and this is compared to roughly around 20% last year. Management alluded to this increase in margin just because of the higher average selling price of the Model Y. And if you haven't seen, the Model Y goes for, I think it was somewhere around $60,000 USD, versus the Model 3 is around $50,000. Another amazing thing about the Model Y is that they actually began significantly ahead of schedule. Originally, back last year when they announced the Model Y was supposed to start shipping in fall of 2020, but they pushed the first ship date to March 2020. That's basically a whole 6 months earlier or so. Essentially, the development cycle for this Model Y was similar to that of an iPhone. And when you look at an iPhone versus a Tesla Model Y, just think of how much complexity the Model Y has compared to an iPhone. Some of you might debate though, the iPhone is quite a beautiful piece of engineer equipment though. If we compare the Model Y to the Model 3, the Model 3 was announced in March 2016, and their first delivery was July 28th, 2018. That's a whole 2 years and 4 months for them to develop the Model 3. However, as I mentioned before, for the Model Y, it took them essentially 1 year from the time they announced it. The reason for this quicker ramp up for the Model Y is because the manufacturing process was fairly similar to that of the Model 3. So they borrowed a lot of the manufacturing techniques from the Model 3 and put them into the Model Y because there's a lot of similarity in components under the hood. Just the exterior shell is essentially stretched out a little bit and maybe a little bit longer. But other than that, the Model 3 and the Model Y actually look fairly identical. Now turning over to the vehicle production, if we look at the numbers on their pages, they report they made around 102,000 vehicles in this current quarter. And if we compare it to previous quarter where they made 104,000 vehicles, the numbers are actually fairly close. And you're probably wondering, why haven't they ramped up production? But that's because the Fremont factory actually closed around mid-March. So they lost a week or two in production. If Tesla continued to open their factories for the last couple weeks of March, they would have definitely smashed last quarter's production numbers. So for the number of vehicles that they produced this quarter, it's actually quite impressive how they've continued to ramp up vehicles. On the screen, I'll just put up how many vehicles per week they're producing based off of the numbers they gave. We also see in the current quarter they shipped around 88,000 vehicles, and they actually produced around 102. So therefore there's about 14,000 vehicles or so in inventory right now. And they alluded to this in their cash flow statements, which we'll talk about later on. But what this means is they have around 3,000 Model S's and X's, and they have about 11,000 Model 3s and Ys that are currently sitting in inventory. This might not be a bad thing because we know that Tesla cars are very hot on the market and they always have a huge demand. So them having inventory right now, sure, it looks bad on the books, but if we fast forward maybe a year from now, I'm sure they'll be able to sell them off a lot like no problem. Just because everyone is looking for a Tesla right now. Everyone's trying to jump on the whole electric car, environmentally responsible bandwagon. We might think the virus has been a bad thing for Tesla. However, I think Tesla has started to clean up their act in terms of being more fiscally responsible. They did mention on the earnings call that they were starting to cut costs, and they really care about their books to make them look good and be able to continue running the company, because when they spent money just flagrantly, this was a worry to a lot of investors, but now the fact that they're looking at cost-cutting measures to cut out all the inefficiencies in their business, this is going to pay big dividends going forward. And this whole pandemic that's happened has really forced them to do that. So I think the virus is almost like it's got a negative effect on their business, but it did force them to be more responsible fiscally, and this will only project the business forward. Tesla's business is also poised to succeed in the long term, and that's because of their culture of innovation. We know that Elon Musk recently put out a tweet about how he's going to turn over the whole HVAC industry with his new HVAC system that's found in his Tesla cars. On top of that, they have other businesses like their battery business, their solar roof, their semi-truck. So Tesla's definitely got a huge culture of innovation, and for that reason, I think that Tesla, they may be seen as a car company right now, but there's a whole lot of stuff going on in Tesla. There's many different verticals that they're tackling, not just electric cars. It's sort of like with Apple, but I see Tesla as even more diverse. Apple used to be known for the iPhone. However, Apple is currently branching out into services. They've got the iPad, the MacBook, and they've got maybe like even the Mac Pro. Who knows what Apple's going to come out with next. People think smart glasses. They even went into the speaker space. They went into Apple TV. Apple's doing even TV shows right now. So you can see that Tesla's taking a similar model, however with larger scale hardware. And with larger scale hardware, there's a huge barrier to entry, which will basically deter a lot of competitors from coming into the market. And therefore, I think Tesla has a very good competitive advantage. And with their culture of innovation, they're going to continue to innovate quicker than anyone can ever catch up to them. So for Tesla, I think this is only good news, and this is why there's so many bulls in the market and people are pushing up the price of the stock. Elon Musk also mentioned on the earnings call that he thinks that self-driving will come at the end of this year, and an analyst also asked, when does Elon Musk think robotaxis are coming? And Elon answered with a very vague guess of maybe next year. And we know that Elon is usually very optimistic, but we can see with the Model Y, his optimism, the company actually surpassed his optimism. So I think that it's very possible that we could start seeing robo-taxis being tested out next year by Tesla. However, probably in the next 3 or 4 years is when I think it'll become more mainstream and Tesla might actually start to rival Uber. Or who knows, they might work together. Another thing that was mentioned on the earnings call was an analyst asked, when is the next Gigafactory coming? We know that they already announced a Gigafactory that's being built in Germany, but maybe there's plans for another Gigafactory coming soon. Because Elon said he might announce it in the next month. And you know what's happening in the next month, right? Battery Day is happening. So it's possible that maybe Elon's going to announce the next Gigafactory there. And with all this hype around Battery Day, with the earnings that came out recently as well, I think possibly from now till Battery Day, the stock could continue running up. Just because the whole market runs on rumor and they sell on news. So if you're looking to swing trade Tesla, it's a little risky, but maybe you would consider start taking a position tomorrow. And as Battery Day approaches, maybe you want to take profits then. So a few risks that are around Tesla stock right now is the fact that there's no real date that's set in stone for when the Fremont factory is going to reopen. And this is concerning because essentially Tesla only has 2 factories, the Shanghai Gigafactory and the Fremont Gigafactory. So basically half their production, or actually more than half their production, has been shut down. Because the Fremont factory is essentially poised to produce around 400,000 cars. The Shanghai factory is currently, aimed to produce, I think, around 90,000 based off of their report that they just came out with. However, it's good that Tesla did diversify and they got their Shanghai factory built. Otherwise, they would be right now a sitting duck in water because they couldn't produce any cars. However, at least they can focus their efforts on the Shanghai factory and really build out that factory so they can service the big, large Chinese market, they're basically like, they're in love with Tesla. They love the brand and they love Elon Musk as a person. So I think Tesla's going to do well in China over the next few years. So it's good that their factory is being focused on right now, as really that's the only factory that's producing cars. One of the biggest things that a lot of the bears are skeptical about Tesla is their cash flow. And we can see that recently in the past quarter, they highlighted that they increased their cash position by $1.8 billion. Their cash flow was negative $895 million though. The reason they could increase their cash position by $1.8 billion is because they did a capital raise of $2.3 billion. The reason why the cash flow is negative is because they're currently collecting inventory off the manufacturing lines. The cars that are being produced, they're not being sold. And that's probably because a lot of sales centers are shut down. So it's very difficult for Tesla to actually deliver those vehicles with the whole economy shut down right now. So the $985 million comes from essentially the 14,000 vehicles that they increased in inventory. So I did the math fairly quickly, and if we take about 3,000 Model X and S's at around $80,000 and 11,000 Model 3s and Ys at an average price of $67,000, we get roughly around 950 million, which is close to the 985 million of negative free cash flow. But the saving grace in all this is that we know, as I mentioned earlier, this inventory is not just going to sit there on the lot. It's eventually going to be sold, and it's not like they're going to have to sell them at a discount because Teslas are so hot. In addition, we note that the accounts payable, yes, they're going to have to pay this off in the next quarter. And what this means is their cash position is going to continue to go lower. But the fact that their factories are shut down, it means that there's going to be a gap in their accounts payable in the next quarters because they're not going to be ordering more material from other factories in China for the raw materials. So therefore, they won't need to pay out accounts payables as heavily as they have in previous quarters, just because right now there's a gap in production. So therefore, the gap of accounts payable is going to happen later on. In the meantime, yes, in the next quarter, they're going to have to pay those accounts payables, which are some of their current liabilities. However, they do have enough cash to cover that if we look at their balance sheet. So those are the main things that I really want to highlight from the Tesla's earnings call. Let me know in the comments down below if you're buying Tesla right now, or you're holding, or maybe you're thinking of selling Tesla because of all the news and all the hype, and the stock basically popped around, I think, $70 after hours. That's an increase of around 8 to 9% or so. So watch out for Tesla stock tomorrow if you're interested in this company at all. Let me know down in the comments below if you want to know a bit more about other companies' earnings. Also note that this video is quite rushed, so I'm not putting as many edits just like my previous videos, so it might be a little bit more raw to you guys. But I hope you still got value from this content. And if you haven't checked it out, check out the Tesla investor presentation, because this is where you get all the information. You don't want to just hear it from me as third-hand information. You want to go check it out for yourself. And you can probably spot different trends in all their financial information to get a better picture of how healthy this company is. As there's a lot of speculation of whether Tesla is actually a good investment or not because of how they manage their cash all the time. Keep up the grind and have a great day.